Hello and welcome to CMC Markets Trading Outlook for the week of April the 20th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is crumbling indices and earnings season. We really move into the peak of U.S. earnings season, and it's actually a fairly quiet week overall for economic news. So likely we're really going to see a concerted focus on stocks this week. So we could see a lot of action in stocks and in industries, and this could also affect overall trading in the markets. And it comes at a particularly key turning point, potentially turning point time for the stock markets. We've had pretty good runs in the market over the last year or so, but if we look at U.S. indices, they've really started to level off in recent months. Up from the October low, we had a big move higher, but in the last couple of months, U.S. markets have really pretty much gone sideways. And what's significant about that also is that we're starting to see some peaking or reversal patterns across a number of markets worldwide, and it's possible that the earnings season that's upcoming and really ramps up this week could start to exacerbate some of these weakening trends. So what have we seen here in the U.S.? I'll start with the S&P. As an example here, we're seeing here a bit of a triple top. This is 2,120. Look, we tested it once, two, three times, and it's starting to roll over again. We are in a bit of a sideways trading channel here between about 2040 and 2120. But here, look at this. We've got a big engulfing candle and a significant turn lower, a takeout of a 10-day moving average. So and the RSI dipping below 50. So we are starting to see some significant weakness. This is the S&P as one example, but generally we are starting to see some weakness in U.S. markets. I'll just show the Nasdaq as an example. Again, a little bit lower high here, but overall this is looking like a triple top. Similarly, if we get to the Dow, again here we're getting a descending triangle. I'll blow this one up to show more clearly. We've got three high here, not quite a triple top, but instead what we're getting is a descending triangle, three lower highs, and this is above a support level here at 17,590. So we are seeing another bearish pattern starting to form. Within overall sideways trends, we're getting these bearish topping kind of patterns. And just to highlight, this isn't limited to the United States right now. If we look at the Australian market, for example, look at this. We've got another big run up into a triple top here, three failures to break through 6,000, and it has started to turn downward in a fairly significant way. The other thing to note is that this isn't just contained to the U.S. or even English-speaking countries. We're also seeing it in continental Europe. In continental Europe this week, we have an additional factor weighing in, which is the what's happening with Greece. Greece appears to be getting pushed closer and closer to the brink, where they're either somebody's going to have to make a deal with them, or Greece could fall out of the euro. Here on Friday, we're seeing a number of European markets take a big hit. Why? Because people are worried that Greece could fall out of the euro or default over a weekend, and they want to get their cash on the sidelines to start hedging and protecting themselves. So I'll show a couple of charts here. This is the DAX as an example here. DAX has had a pretty good run. Recent new all-time high, getting close to 12,400. Look at this, though. We had a negative divergence on the RSI, so a big non-confirmation there. And what have we seen? We've seen it start to drift lower. And look at this, small, and then it's like after we took out this 12,215 breakout point, it's like the rug's been ripped out from under it. Bang! One day down to 12,000. Next day, 12,000 becomes new resistance, a bearish confirmation. And bang! Down for another. This is a 350 point hit here. So this is a pretty substantial move, and we've also got downward, and we've also got a break of 50 here on the RSI. So we're also seeing the DAX turn lower there. And one other European one I wanted to highlight. This was something that our analyst in France, Nicolas Cheron, pointed out to me this morning. Was the Spanish index. We're actually seeing a rare but bearish pattern, which is an island top. And I'll bring it up here and I'll show it. And basically what we have, I'll use the 6-month chart instead, was we had a gap up back here. and then we had some trading above it, and now we're seeing it starting to gap down again. And what this is suggesting, all these people that were on this island have now been caught offside that had perhaps gone long, and so that's also a bearish sign. And so where we're seeing this is 11,600 has taken out that. It's now getting close to testing this previous breakout point around the 11,250 to 11,300 zone. Again, the RSI has also dropped back under 50, suggesting a downturn in momentum. So we're not just seeing a crunch in the U.S. market, we're also seeing a crunch starting to develop in stock markets around the world, which is potentially could be bearish. So we do want to keep an eye out for that as the implications go on, especially because we're heading into a slower week for economic news. We could see more focus on other areas. So, based on that, I just wanted to show some of the charts for some of the main companies that are reporting in the United States over the next week. It starts out fairly quiet on Monday. We have IBM and Halliburton. On Tuesday, we get Yahoo and DuPont. And on Wednesday's a really big day for earnings. We get Facebook, Boeing, Citrix, Qualcomm. So a lot of big tech. And one of the reasons we're seeing the U.S. starting to get weighed down here with in the earnings season is that we started to see a little bit in the guidance last time that the U.S. dollar has had a massive advance against everything over the last year or so, and this is finally starting to impact U.S. corporate earnings. It hits corporate earnings in two ways. It makes life difficult for U.S. companies that want to export because now their products are more expensive, and at the same time for U.S. multinationals that are operating all around the world, when they bring their overseas earnings back to U.S. dollars, they come back into the lower level. So the U.S. dollar is starting to have a big drag on earnings. We've already seen that start to happen in the U.S. market. Interestingly enough, one of the first ones to really show it was Netflix, and the stock didn't react to it because they were able to put up a big subscriber growth and say, hey, we're still a momentum play, but our earnings are getting hit hard because of the higher U.S. dollar, and we actually ended up with a big breakout for Netflix. But on the other hand, we are seeing other companies starting to come in with shortfalls based on the U.S. dollar impact, and that's been a little bit more mixed. Just some stocks that are reporting this week. On Wednesday, we have Facebook, and I'll bring up Facebook's chart here. And what we can see is that it's been starting to roll over. Up here in May, we had a peak. We've now got a lower high here. In March we had a high, all-time new high. April we've got a lower high, and look at this, it's starting to break down here. Again, RSI turning under 50 is suggesting some downward momentum. So people had some fairly strong expectations, say a month ago, about what Q1 earnings would look like. Between the soft data for March, the higher U.S. dollar, the kind of disappointments, or at least everything getting blamed on Forex. And even if we don't have shortfalls, we could start seeing shortfalls in guidance. People are getting a little bit more leery on U.S. earnings. They're starting to pull back on their valuations, and we're starting to see stocks come off. We'll also show Boeing here as a example of a big industrial. And here we're seeing Boeing had a lift here at the beginning of the year. It's quietly leveling off. Once again, we're getting a series of lower highs in the index, confirmed by a series of lower highs in the RSI, suggests this thing may be topping out and rolling over. On Thursday, we get earnings out of Caterpillar, who I just wanted to highlight, and also Google. So it's a big week not only for tech but also for industrials here. Caterpillar's already been slammed pretty hard. It took a big hit in the fall, took another big hit back at the end of January when it missed on earnings. And the big thing for them is, of course, the big crunch in the resource sector, cutbacks on exploration and production spending means less demand for equipment for oil field as well as for mining. So Caterpillar's already taken a pretty substantial hit on that. Interestingly enough, it's bottomed out. It seems to be trying to bottom out. High end around 85, low end around 78, and it's been trading in this area. I think they might have a tough time breaking out and out of this band unless something really significant happened. They'd have to beat pretty well and maybe come through on guidance. Otherwise, this could still be vulnerable to a bit of a pullback within this channel here. And I will highlight Google as well. and show that here we've had a double top in Google in March. It was actually short of this big double top we had last year, lower high, and this thing's been steadily and increasingly rolling over the last month or so. So expectations are coming back down. And here's something interesting to note as well. Is I look at how oftentimes you'll see technical patterns will kind of mirror each other, and here's a good example of that, where you had a double top here last year. In December and January you had a double bottom, and here in March you had a double top again. So oftentimes you can see where if you get one type of bottom, that the next thing might be the opposite in the next top, and so on. So you do see those kind of patterns play themselves out in markets. So that's something to consider when you're doing technical analysis and looking at things. So those are a few of the companies that are reporting. We also see heavyweights in healthcare. Some of the big U.S. mining stocks are reporting. Freeport and Newmont are both on Thursday. We've got a lot of financials, airlines, healthcare companies, you name it. We get a real broad sense of what's going on with the U.S. economy over the coming week, and which way earnings trends are heading. So this should start to give us a better idea and feel for what's going on out there in the U.S. economy. I'll move now over to resource markets and currencies. I'll start here with crude oil, which it has been so pretty dicey. But look at this. It had its base here, and it looks like it's trying to break out of one. Of course, we had the big massive sell-off in crude oil here. We had two saucer or rounded bottoms. We had the cup, the larger one, then the handle, then the breakout. We've broken out of an ascending triangle. We've lifted it up out of this channel above 55, and 55's come into support. So for the near term, we could see possibly a bit of upside for crude oil. I still think it's going to struggle to get very far, just on the basis that I don't think the supply war has ended at all. Any decreases we've seen in U.S. production have been more than offset by increases in OPEC production. Iran could still come back on stream later this year. So I think crude oil could have trouble over the longer term getting very far, but for the short term it might still have a little bit more upside. The first spot where we might see this rally get contained is here around $58. This is the 23% retracement of the big massive sell-off that we saw in crude oil. Then we got the $60 round number kicking in here, and this resistance level was about $63.50 on WTI. I'll take a look here at Brent as well, briefly. Oh, and by the way, we also saw that sentiment, interestingly enough, looking at client sentiment on WTI, is still fairly mixed here. We've still got some clients are net short in terms of position value, although number of clients are net long. So there is some indecision here, but it's also telling us that the bears seem to have a little bit more conviction still at this point in time. Whereas if we move now and look at Brent, interestingly enough, people seem to be a bit more bullish on Brent, and both sides are pretty solidly long, whether it's number of clients or position value on Brent, and it's been bumping up here against this resistance level about $62, a key retracement level, and the top of this 53 to 62 trading channel that's been in place. We have seen some uptick in momentum here on the RSI as well. If we did get a breakout, next resistance might be around 60. That's about 66.75. This next Fibonacci is in at around 72.50, and that may be a point where a rally could see itself getting contained if we did see a continued breakout here for Brent. The gold price I'm just going to touch on briefly here. It's been moving up, but interestingly enough, oops, that was not what I wanted. That was okay. We're getting a head and shoulders base here. We had a left shoulder here back in February, the head in March. We're getting this right shoulder here, which is in at around 1180. This neckline resistance is about 1220, and we're sitting on 1200. So right now we're going sideways. The RSI is kind of holding 50 though, so overall it still looks like we're base building in gold. And I'll just highlight a couple of currencies here to wrap up. Particularly one we've seen quite a bit of movement in has been the Canadian dollar over the last few days. We'll bring up dollar CAD here. And we've seen it roll over pretty substantially. Two things driving this. First of all, oh, and by the way, we were talking about triple tops. 1, 2, here's another triple top. And so we are seeing a number of these play out in various markets, not just even stocks. So triple top for the Canadian dollar, starting to go down. We had this negative divergence in the RSI. RSI has continued to trend lower, telling you that the momentum is shifting downward ever so steadily. And we finally had this breakout down of 124. That was a 128 to 124 channel, measures you down to 120, which also is a round number and also comes in around this 38% retracement level here. So with a cluster of technicals, there is potential with the pair already having tested 121 that it could test this 120 area over time. The things that are driving this improvement in the oil price, and also a growing sense that the Canadian Bank of Canada is probably one and done on its interest rate cuts. Last week they held the line once again on interest rates and indicated that they expect the economy to improve in Q2. We saw an improvement in Canadian retail sales rebound in March, so things are starting to look like they're looking up a little bit for Canada. Another market we may see that could be quite active is sterling over the next week. We're still in the heat of the UK election campaign. So, and what did we get here? We've got pretty much a double bottom here in place. Certainly, at a minimum, we've got a positive RSI divergence. So we could be getting a base starting to form here. This low is around 146 even. The key level here is 150. We saw it peak above here. It peaked above there, and the last two times it's peaked above 150, it's been pounded right back under. But we're still pretty close to it, near 149.60 at the moment. And if we did get a decided breakout and a decisive one that held, then we could see it. That could complete a base and signal an upturn. The problem, and why I think we're seeing this keep struggling at 150, is that we are seeing the overhang of the election uncertainty, because at this time it's still not clear who might win the UK election, who might be able to cobble together a coalition and the risk that we could have a hung parliament drag on for some time seems to be capping the upside for sterling in the short term. But if after the election and once a new government finds itself into place, we could see this base building could be starting to tell us something. So we'll be keeping an eye on that over the next little while. Also, just briefly, I'll highlight Aussie dollar and yen and euro. So we've got Aussie dollar here. Again, it looks like it's starting to bottom out. And in this particular case, we talked about there's almost a 1, 2, 3, a small triple bottom here in and around 75.50, but then we've got this big resistance here up just above the 79 level. But the momentum is RSI is telling us momentum does seem to be shifting, and an upturn looks maybe pending. Let's do euro dollar and dollar yen. Euro dollar is kind of all over the steady. It's bouncing around. We've got a channel basically emerging here, but this is 104.50. This is 110. We've seen it bounce up and down off of a couple of intermediate Fibonacci levels. This one's about 107.10. This one's about 108.60, and we may see it continue to bounce around. And if we did see anything happen with Greece, we could see it play out in euro dollar. That could get very active in a big hurry in either direction, or both, depending on what happens. The final one, just to briefly highlight here, is dollar yen. That here we don't have quite a double top, but it does look like we're getting a descending triangle forming. That's 121.75. This is about 118, lower high, and it does just appear to be kind of working its way down. This looks like it's topping out, and if we go back, we could also consider that this is actually a pretty big double top that appears to be in place. An ascending triangle broke, and now we've got a descending triangle forming. It could be is looking like a topping formation in dollar yen. The one last one I wanted to highlight, there was some talk I saw about some changing of rules in Hong Kong. Hong Kong has just exploded up in the last few weeks, and and had started to level off. This was 23,650. This is 28,225. And so massive rally, starting to level off, extremely overbought. Whether China brought in new rules or not, or what's going on there, this certainly is looking vulnerable here. It wouldn't take much for this to kind of tip over, as we've seen, and start a correction with so much profits built in over the more recent short term that people may be looking to take off the table. So overall, the new week is looking to be another potentially quite volatile one. As I said, it's less economic news. The one piece of economic data we do get is flash purchasing managers, which might give us a first feel for how things are going in April. People will look mostly at the U.S. number to see are there any signs that March was a one-off, or is this a real slowing, or are things starting to rebound in the second quarter like they did last year? We'll see what happens as the weather's improving in the United States. So really the focus is on potentially on what might happen in Greece and the Eurozone and their political problems and financial problems, and on corporate earnings in the United States. Those look to be the big drivers of trading for the next week.